Check, check. Quick sound check. Can everybody hear us loud and clear? What's going on, Coach Paul?
We can hear you loud and clear, Coach Jay. How are you doing on this not so exciting day?
Doing all right. Made it out alive. Got all my fingers intact. Didn't get chopped up too much. Um, made it out. How are you doing today, Coach?
I'm pretty bored. I got chopped up into currencies. They really didn't trade much, but I lost well.
Good. Well, it's good. Let us know how you did in the chat. I know the audience is kind of low right now, but I'm assuming that most people don't have much to review for the day because there wasn't a lot going on. But we are going to talk about it anyway. We'll prep for what tomorrow might bring with today's price action. But welcome to At the Buzzer, our market recap. If this is your first time here, the goal of this segment is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity. We want to see how we could take advantage of those opportunities while managing our risk. If this is our first time meeting, I'm Coach Jay. Been a top step performance coach since June of 2023. Been trading for the past 13 years and in the futures markets for the past 6, and that is Coach Paul. Coach Paul, go ahead and introduce yourself.
Hey, I'm Coach Paul. I've been with Topstep since April of 2023. I've been involved in the futures trading industry for 4 decades. I'm here to share some experience, some knowledge, and hopefully help you become a better trader.
Awesome stuff. Thank you for that, Coach Paul. You are all our chat. Let us know how you did today. Were you up on the day, down on the day? Maybe you stayed flat today because you didn't see price action that was favorable to your setups. That would have been a decent choice. But let us know how you did. I see some traders. We got Charles Williams up a bit, Lenny Bradford down 2R. Uh, Sod Buster just saying thanks. Thank you for joining us. Andrew plus 400 with the way cattle is going. That's just enough for a pound of hamburger. How did we become coaches? Someone asked me one day, "Did you want to coach?" I said, "Yeah." Uh, I don't. Yeah, that was it. It's, after a conversation with Eddie, like, hey, I think you'd be a pretty good coach. Uh, Here we are.
Yeah, I've been a coach for 20 years, on and off, coaching traders, also basketball. Um, Someone I knew at Topstep asked me if I wanted to coach there, and I said, "Yeah, I'd be interested," and so I did.
We're happy that you did, Coach Paul. Shivanash wants
We're
to be a
happy.
coach. Uh, I don't know if we're increasing the roster, but if we are, uh, I'm gonna be honest with you. I don't even know what the path would be to do that. But if you want to coach, maybe get active in Discord. I know that's how Dakota became a coach. All right, Abdu, thank you for joining us. Who else do we got? Traded pretty well today. The world is yours. Plus 207 today. Mr. Bugs is green. Investor plus 800. Courtney down $73. It's a nice manageable loss. Dime LA saw some opportunity in gold plus 700.
Yeah, nice.
I'm gonna Yasulana. Hopefully I said that right. Plus 2600, two XFAs. Nice day. And we got a trader passing 100K combine. Shout out to all of you. Nice trading. I don't see a lot of big losses on a day like today, which is nice. Hopefully that risk management Coach Paul keeps talking about is resonating. Let's get into the markets. As far as news goes today, we did not have much as far as planned news goes. It was a pretty quiet day. I think the only thing that was really on the economic events calendar that was anything to really pay attention to was the crude oil inventories. We did have Japanese PPI last night that did get the Asia markets moving a little. The yen was up, Nikkei was down, but not a lot, and really not a lot of unplanned news either. It was a pretty quiet day. Tomorrow we do have some, we have PPI tomorrow. We have jobless claims, we have industrial production. We have Powell speaking in the morning. So the markets today looked like a day that preceded a day with a lot of heavy economic news, right? This is normally what they're going to look like. Coach Ray and I put together a document for understanding market personality. It's in the coaches library in Discord, but one of the things that's on there is what usually constitutes a range bound day, and it's usually a day before, you know, big economic events. So not surprised to see this price action today. I'm going to be honest, I didn't think it was going to be this tight of a range, but markets don't care what I think. We got Cisco
And
earnings out. Earnings per share came in at 96 cents. Estimate was 92. Revenues came in at 14.15 billion. Estimate was 14.05 billion.
Well, you talk about a tight market, coach. We had a range in the S&P of 35 points. The average true range is now back under 194. It's the lowest we've seen it in a couple months, maybe this year. NASDAQ range was 183 points, and the average true range is 465. So
That was a
it
5 minute
was
candle
tight.
2 weeks ago.
That was a 5 minute candle. So what I'm really happy to see is what we said is that people were trading the range that for the people who responded, whether you made a little bit or lost a little bit, that's really all that was there. So
Yep.
that's you can't make silk out of a pig's ear, as a farmer used to say to me, and today was one of those days
It's
in the
this
equities, at least.
the most farmer thing I've heard in a long time.
And you'll remember it.
Yep. All right. So we have 35 different markets we can trade with Topstep accounts. The equities are kind of quiet, but we did have some other movers, and we'll talk about those. We had gold down 2%, silver down 2.3%, and natural gas down 4.83% for our biggest percentage mover to the downside. Natural gas is kind of slowly creeping back into this top three percentage mover every day list again. If you guys remember how we started off the year, it was almost every day. Kind of happening again. A little bit more to the downside. Maybe that is a seasonal thing. We're coming into summer, but
Yeah. Summer and natural gas can get really volatile in the summer because of electricity. But it seems that the weather across the country is normal to cooler. So big move down.
to the upside, we had heating oil up 1.11%, soybean oil up 1.4%, and wheat futures, our biggest percentage mover to the upside at 1.45%. To talk about our big four, we had crude oil down 1.27%, the S&P up 0.06%. We already talked about gold down around 2%, and the NASDAQ up 0.57% to round out our big four. We are going to go over the equities. I would imagine this is going to be a pretty quick review of these because not a lot happening. But let's look at the daily, Coach Paul. See what we're looking at really quick.
I call it the grind higher.
Yep.
It's a grind. Still, we've been talking about, and what else to say? It's very positive setup here. Um, as we were talking in the green room, this starts to act like one day it's going to be an explosion. Like pent up buying is going to come, and that's really kind of what I'm seeing. How about yourself?
Yeah, seeing the same thing on the daily. We are pushing higher. The one thing I did put on this chart was we're about halfway through the month. Um, Monthly VWAP is down at 20,000 to 20,300. Kind of in this gap that we had to start the week. A little extended from that. Right now, I know people have been saying, "Oh, this move up has been happening on lower volume." Every once in a while, I just put these monthly VWAPs on, normally halfway through the month, just to kind of see, same way we look on a shorter time frame, if volume is supporting this move. We're getting a little bit extended, but that doesn't mean I just want to short this market. All of the fundamental news so far has been bullish, but just interesting to see here. We're about 1,000 points off of that monthly VWAP right now. Uh,
So
Outside of that, on the daily, I mean, we can start. We can get into the shorter time frame.
shorter. We
Was
can try to make silk out of a pig's ear today, so let's get at it.
there's literally one thing I want to talk about here, and it happened at the end of the day. 21,399.75. We're gonna put that on the charts. Just mark this level on your charts for tomorrow. 21, 399.75. Basically 21,400. Why are we marking out that level? Let's go to the DOM, and we can see 21,399.75, 1,800 contracts traded there. About a half hour to go in the session, or about an hour to go into the session, there was a 1,500 lot order on the offer, which means it was a passive seller sitting at 21,399.75. Thought that was a very interesting price to put that, not at 21,400. You one tick above, and it makes a whole lot of sense. One tick lower is interesting. It was not a spoof. Sometimes traders see these orders and they say, "Oh, that's not going to get filled. It's a spoof. Why do you guys pay attention to it?" Someone put out 1,500 contracts to sell in the NASDAQ and they let the entire order get filled. What does that mean? We'll see. But
It means there was selling at that price.
exactly. Now, are they selling to open, selling to close? We don't know. Is it a hedge? We don't know. But someone picked that price and said, "Hey, this is important. Put 1,500 contracts there." Uh, I wish I'd had that person on speed dial so I could ask them, "What the hell are we doing? What's the plan here?" But what we can do is just put the line on our chart and see how the market responds to it from there. Uh, Outside of that, Coach Paul, what are we looking at really here?
Like I said, it's a grind. Um, I mean, this looks to. I mean, tomorrow I'm very friendly to it.
Mhm.
Maybe I should have taken those 1,500 lots out. And then, but somehow they wouldn't have gotten filled.
Right.
But really, what I was impressed. There was no break. Really, we still believe it. We finished 124 higher in the Nasdaq. Um, without there really wasn't selling.
Nope.
So uh, uh, it feels like I said. I mean, there is no. This market is not doesn't have fear written on it. That's why VIX is getting crushed, and the fact that it's safe again, and I think that that reflected the correction is sideways to higher. This is a typical bull market.
I agree with you, Coach Paul. We did take some trades today during fast markets, a couple shorts, couple longs, just kind of fading the range. And again, I don't want to say that there is an opportunity. I just look at markets like this and say that these are normally days that I find myself getting chopped up. Uh, how do we identify that the market is going to be a range? If you're, let's say you're a trend trader, you're a momentum trader like me, and you get chopped up a lot in range bound markets, how can we identify it? The same things we use, or the same things I use to identify trending markets, I'm going to use to identify range bound markets. Now, if we look at VWAP from the opening range, and the first trade that I took this morning was a short at 21,386. We were talking about yesterday's high in the S&P and in the Nasdaq. In the Nasdaq we traded above it. The S&P we didn't trade above it. But basically, looking for today's the day before a big news day. I don't know how directional we're actually going to get. So on this rejection up above 21,400 to really find any buyers, the idea is to short in it. Look at this VWAP line. It never left the opening rate, the 3 minute opening range. So when you
Yeah.
see this,
Camotep in the chat said VWAP did not leave the 5 minute opening range.
right?
He faded it. So great job.
Yeah, it it was almost directly at the 50% of that opening range the entire time. That's if you want a different dictionary definition of a range bound market, this is it. That VWAP did not go anywhere, but there was volume traded in this range. Accumulation leads to distribution. There's a move coming out of this. Just needs something to start it. All right. Anything else here, Coach?
What else is there to say that we haven't already said? Once again, I have a feeling it's going to be a big move
Yep.
to the upside, but that's my burden, not yours. It's not advice.
Just information. S&P is pretty much the same story. Really, all the equities. We're not going to wax poetic about really nothing. Sometimes there's nothing to do, and that's our job as traders is to identify when there's not a lot for me to do and to stay out of trouble. All right, let's move over to gold, Coach, because gold did actually move. Take a look at the daily. It's that purple line there.
That purple line is the 50-day moving average. That was our low. I think we settled right there. And like we talked yesterday, it's starting to pick up momentum to the downside. Um, we've held this 50 days since what, April, what was it, March? Um,
Yeah, last time we closed below it was early January.
early January.
Mhm.
So all year, almost 6 months.
Yep.
Um, yeah, this, like we said, now here's the interesting that 20-day moving average is starting to curl down. Um, so not only is it accepted the sideways, it's starting to turn, it's losing momentum. Um, my feeling is still with the volatility going out of equities, with the geopolitical situation calming down. Can gold be next? Well, it's sitting on the precipice. Um, and looking at today's action from last night, the old buyer in Asia is not there.
Hear that
Um,
200 moving average on the 30. This was a nice trade.
yeah, there was no heat. So when we see that it came in early and often in a crescendo, which stopped at the 50-day moving average, this is liquidation. And look at that sell volume that never recovered, and that was late. That was what time? What, noon?
This one here, this was no, this was 7:30 Central Time.
Oh, there was no buying. And you could just say there. Look at the volume on the other side of that, on the buy volume. Look at the range it got.
Right. Talking about a 16-point range compared to a 30, almost double the range. Uh,
So,
this is effective volume here.
um, very heavy. Tomorrow could be one of we talk about. I'm not saying this. This is my feeling. You could see massive liquidation. Like, get me out,
Hmm.
um, and go down to the 200 in the next week. That's my call.
200 moving average in gold is at 28.56 currently on the daily. Shout out to Hogue. His weekly kickoff levels right around that 50 moving average, 50-day moving average as well, 3180. House account taking simple trades this morning. The opening range trade, 1 minute opening range. Again, trading does not have to be complicated. You just have to let the edge play out when you have it. And we continue to talk about this, but these guys took a 1 minute opening range trade, right? And I think the thing with this, right? They took you can see how small this 1 minute opening range was, right? So we broke initially to the downside and gave it a few points, right? It was we're talking about a 2 point opening range. So I think they gave it about 4 points on the stop and trusted it. What's really important here is to kind of let the edge play out at a minimum to a 2 to 1, right? Coach Paul, you say 2 to 1s on a day trade
Mhm.
is a good trade. At a minimum, letting it play out to a 2 to 1, right? I think what happens to a lot of traders here is take the short because that's what the setup says. You go into a drawdown, it doesn't hit your stop, but now you have that uncomfortable feeling of sitting in a drawdown. And the minute the trade goes back into the green, we're trying to figure out exactly when we can, lock in green because we don't want to feel that red again. Uh, you miss out on the 2 to 1, and then maybe you have a management style that says catch a bigger part of this move, but really letting this trade play out. Um, is important. It's again, it's a simple trade, but I think this is one that could have very easily been cut for a small winner before it actually. And Pete just said, "I did that," right? Go ahead, coach.
And that is common, and it goes back to the principles of success of winning traders. And one of them is predefine the risk. You enter that trade, predefine risk, and it's a 1 minute. So the risk is not great. The stop was there, but the key point is in the mindset is accept the risk or don't take the trade. So in other words, when you do that, if you accept it and you're willing to take it, you put that stop in and let it go. Like literally don't watch it. When you can get to that point, you've really accepted that your your plan and your risk. You just described, and you kind of triggered me. I understand that when I was
Oh, me
for
too.
years, I was like, oh, it's gonna get stomach, that whole anxiety and emotional roller coaster because you really haven't accepted when you got in. I mean, really. Um, so what I love on that is put it in. Don't they don't over manage it. It's here.
Yep.
That's the price to enter. Think about it, buying a car when you say, well, let me just send me a bill. I don't know how much I'm willing to pay for it, but you know, send me. I'm going to buy it, and then your bill becomes more than you expected. Um, that's what having a trading plan and having some to control. I don't think you can fully control your emotions,
No.
but you can control your risk by a routine. And coach, you just described to a T a routine.
Yep.
So great job, Hold.
I also want to comment on that too because like you said, coach, it's not an easy thing to do. If you were listening to Top Step TV, and maybe this is when it's good to have a trading buddy. Hogue and JD were going back and forth the entire time about whether or not they wanted to manage the trades, right? And they both had to keep reminding each other that, hey, we said we weren't going to touch it, so we're not going to touch it, right? Because human instinct is going to tell you, just take the money, just take the money, just take the money. But, and I think I've heard Hogue say it that no one is like genetically predisposed to being good at trading, right? Because we try to look for safety, and sometimes you have to step out into uncertainty to see profits, and it's a scary thing to do. And shout out to both of them holding each other accountable to saying we said we weren't going to touch it, so we don't touch it, and then that's how you get your profits. So you know, ideally you can do that on your own and you don't need an accountability buddy, but people who've been doing this for a very long time, Hogan, JD, still have to remind each other, hey, you know, this is this is what we said we were going to do. uh Anything else on gold, coach?
Yeah, keep an eye on it tomorrow. We could see the same thing. Boy, that's just telling you, the tide is definitely changed.
Yeah. Yep. But he's rallying. We finally broke this neckline here, closed
Yeah,
below it.
double. Let's put a line chart on that to get a different perspective.
It's going down the mountain.
Yeah. Um. So, man, it's doing it. We steady. It wasn't like it was a scare. A quick liquidation. Which we just talked about. There's long-term buyers are starting to feel a little uneasy now. All
And rotate
right,
him.
tour, the tour to gold.
I was try to flip him around so he can ride down the mountain, but you guys get
Yeah.
it.
So,
He's falling off the bike. Uh, yeah, this looks
boy,
like. Go ahead, coach.
right there, that's a defined double top.
Yeah, agreed.
That's why I look. I don't know if you lose. I like to look at line charts because they give where the settlement is or the close. Um, and when you look at it that way, well, I mean, that's the Alps. Um, boy, it's moving down fast.
Yeah. Yeah. I mean, and gold has been in this, just buy it kind of mode. But and again, this is still a market that's in an uptrend, but it feels different, right? This time kind of feels different, especially with the equities starting to rally. So a month ago, where we were getting this pullback and we were talking about, hey, where can we buy it and look for all-time highs? I don't know that I hear the same sentiment really from anybody, and that doesn't mean that anyone's right or wrong about it, but things have kind of changed a little bit.
Yeah. Um, you should get yeah, and hmm, what's that price? The
Uh,
50-day moving average?
3150, sorry, 3173.
Let's put a line on that for tomorrow.
73. So we got a couple of lines. We got one in the NASDAQ, 21,399.75. We got another one in the gold, 3173. Lines, keep those areas on your charts and, and watch the market's reaction to them. Because
Yeah.
these are decision making areas, right? What are we going to do here at an important decision making area? And then we trade from there. Anything else on gold, coach?
No, but I'm going to be watching it closely tonight. So let's go forward.
All right. I'm gonna go back to the Nasdaq really quick. Fudge had a question about the long that I took this morning in the Nasdaq. Um, who else caught that trade? Was anybody else in that trade with me? You guys might have seen the trade we're talking about, but we had very choppy range day, uh, right? And the reason I took this long, right? So the initial trade that I took was a short. Brad, you called it an ES. Nice. Initial trade I took was a short just because we got extension above the opening range and, VWAP never left. So just looking for a fade back into it. But this one here, right, where I think I took a couple more scalps in this and took them for scratch or small losses. Then I told myself to wait because volume will tell a story, right? So we had this volume spike right here, and it looked like at that point we might be trying to extend the range lower. But and Andre asked the question. He's like, "Hey, and everybody kind of woke up at the same time, like, oh, the volume's moving." I think it's very important when this happens to really kind of keep the whole day's context in mind, right? Because yeah, some volume just happened, but uh, and anyone who was in the volume class with me last week, you guys know a couple of questions that we ask, right? When we see high volume, who's in control, right? In this case, it was sellers, right? And is what they're doing sustainable, right? So we saw a high volume spike compared to everything else that we've seen around it, but that's an anomaly compared to everything else we've seen. On a day like today, what is the likelihood that this volume sustains to the downside, right? So when Andre asked about it, he's like, hey, you see this volume picking up. What do you do? It's like, I just want to see whether or not they continue. So I have taken the trade off the lows here. I could have, but there was actually some volume that stepped in, right? So they could have on a different day continued to push this lower. But the trade was once we close above this high, we talk about this every day. Once we close above this high, now I'm long and my stop goes on the other side of it. Now it's a 50-point stop. I took it with a couple micros, but this here, Coach Paul, give me a percentage.
75%.
Right. Yeah, I gave it a little bit lower just because of, the type of day that it was. But just
One thing though, this didn't make the low of the day.
exactly. Exactly.
So it's not a 10,
Yeah.
but
Yeah. This one was definitely lower probability because and we can see it didn't play out the same as it normally does, right? We came back to this because this didn't happen at the low of the day. If this was at the low of the day, I think the result would have been a little bit different. And that's why I was more comfortable kind of managing the trade up here, right? So I got long here, and the target was these highs over here initially, and then 21,450. But got to remember the context of the day, right? Range bound day was my target a little. I was looking for 450s. Ultimately, we got to 420s. I'm going to take something off the table, but we can see the market kind of respected this volume for the rest of the day. But that's what that trade was.
Boy. And to tell you, that wouldn't be that kind of a 50-point risk. I mean, it's $100 on a micro.
Right.
100 to me to make 200. I'm going to take that every time.
Yeah. That's what I was trying to do. Let's see what it actually paid out. So I was risking 50 at these highs. So I took most of the position off with this hesitation up here. And again, I can have a target. We could have targets for where we think the market can go, but we have to manage what the market is actually doing, right? So I actually think I said I wanted this to go to 480 because that would have put me pretty close to 2 to 1, or if not a little bit more. But if the market's not going to go there, I can hold this, yeah. But it was going to come and probably stop me out at some point. So managing the position where I took multiple micros, right, 5 micros, and then just scaling out, um, and still assessing what the market says because the market's not going to move just because I wanted to. Uh, but yeah, looking for a 2 to 1, you got about a 1.5 to 1 on that if you held it to the highs, and then we got almost the exact opposite trade at the at the highs here. Uh, all right, crude
Boy.
oil coach Paul.
Yeah. Let's start at the daily. We tried to get over that 50. We're struggling.
Hmm.
Um, but what was the high of the day?
50-day moving average. This looks like, doesn't that look like a gold chart?
Doesn't it look like the gold chart?
Had to flip it over, but
Um, yeah. It tried early. I mean, it couldn't get momentum. I tried to buy it early or this morning, got stopped out. Um, let's start with we're still above the 20s flattening. Um, look at the volume. This is a light volume, which is still kind of friendly to me. If it gets a chance I get a chance to buy it at the 200 moving average on the half hour, I'm going to take the risk. To me, it seems we're going to go test that. Um, but this too at a tight range. When we start
yep.
from last night, left early.
Yeah, volume. I'm pretty sure volume left that early too, right? Yeah.
Yeah. Um, and when it left with VWAP. I like that. Uh, but even then, it took what till London Open.
I was gonna say we were talking yesterday about excluding what happens during the Asia session for oil because it wasn't moving. And today or last night Asia started it, and then London said, "Hey, hold on a second.
We got more.
Party doesn't start without us." Brought it back to the range, and then started to sell it.
And we did it again in New York. And that's the 50-day moving average right there. All of that line probably equates, if we look at the 50-day moving average. Yeah. So what I take out of that, if the funds aren't buying it, they're not, they're not getting long or they're not covering. Look at that. Once, twice, through every opening, and they were all wicks, right?
Yeah,
Or at least London. And so, yeah, we got to go back down and test that 200 moving average on the half hour.
right around $62.
Yeah.
Crude trading 62.86, so that's not out of the question for
y-
London session tonight.
Yeah. So, boy, that's classic, though. Look at that. I mean, Every session went to that price and said, "No, we're not buying it." Whether some Middle Eastern countries offering 50,000 contracts there, I don't know. All I know is the price action didn't follow through. And I think I mean, that was selling from yesterday's rally. Um,
Yeah.
I'm still a little friendly to it. So
Did have inventories come out, and this was the inventories candle here. Rest of the range for the day, pretty much. House account did get in a crude trade that they held pretty long as well. I don't remember if they were long or short crude.
let's look at the first minute. Probably short.
I think they were long.
Oh,
I think they were long. I don't know when they got out of this trade, but I know they had a pretty wide risk because they were still in it through this. Yeah, I don't know how that trade went. I'm pretty sure they got out of it with a profit, but
Jane and Jane Ann says long.
yeah, yeah, they were long because I remember. Yep, their stop was below this swing because I remember them saying that it got to within 2 ticks of their stop on this here. This is why stop placement is important. Let's look at Coach Paul's 2 ATR stop on this 1 minute chart. Let's say I go, let me fix this because this should not be. Also, a little trick here. If you don't want to watch the crazy candle action, a couple of tricks you can do. You can do Coach Paul's, just take the candles off. That works. Or you can take this long short tool, set your profit target, and then set the opacity to 100%, so you can't see what's happening. You just know where your profit target is. Uh,
Where where did you find that tool? I'm
uh,
not even familiar with that.
all right. So in the drawing tools, you have one, two, three, four, five icons down. You have projection. So I use a long position here. You click, and then I'll see. Okay, here's my 2 to 1. The ATR was point 0.5, was 5 ticks, so my risk was about 10. It's a tight opening range too. Uh, 2 to 1 right
Yeah, I
there.
like it. I like that.
Yeah. Now I block it. I can't see the candles. Just get to my profit target or not. Stop me out. Or you could just walk away from your charts. You could, whatever, whatever it takes to let your trades play out.
I I know what I do.
Uh, Ruslan says, "Is it safe to ask what happened to Coach Dakota and why his payout was denied?" Coach Dakota is actually a scammer. Um, he's been lying and scamming us this entire time, and we've gotten rid of him. So, any other questions we got in the chat? That was actually a joke. That was a joke, and Dakota posted it on X on Twitter as a joke. Uh, he did it as a joke, right? Hopefully, we all have a sense of humor here. I love working with Dakota, um, and we got some pretty big things coming up with Top in the future. He is not uh, a scammer. He did that as a joke because, I mean, unfortunately, and it's not a joke, right? And I think, if you're here watching and you're in a TopStep account, hopefully you're in a TopStep account. But if you're not and you trade with other prop firms, you've even heard MP say it, right? Just go with somewhere you trust. There are times where payouts get denied. Payouts even get denied from TopStep sometimes. Usually, if they're getting denied from TopStep, they get denied with cause, right? Usually somebody's, doing some chargebacks or something like that. So as long as you're not doing anything like that, I haven't seen top set payouts get denied. But there is the case sometimes in other firms where, your trading style is different. So we're going to deny a payout. So whoever you decide to trade with doesn't have to be top step. Hopefully it is. Trade with somebody you trust that at the end of the day, when you do all of this is a hard thing to do. I would hate to do a month, 2 months, 3 months of work, say, hey, where's my paycheck? Like, well, nope, we're not going to pay you. Uh, I don't know that I could say on the internet the things that I would want to do if that happens. So
I think it'd be a little more than swear,
a little bit, yeah,
most likely.
a little bit. But yeah, trade with somebody you trust. I trust TopStep. That's why I'm here. I don't work for TopStep. I work with TopStep as a partner, and I do that for a reason. Any other markets we want to talk about, Coach Paul?
Um, yeah, let's look at the soybeans. We talked about that yesterday. Let's do that again.
Soybeans. Yeah, Dakota, if you're hearing that joke, I had to feed into the joke that you played on the internet. 'Cause, he did it first. All right, soybeans. What are we looking at?
Throw them under the bus. Um, let's look at the daily. We're holding. We talked about this on the buy side, buying the dips. We're above the 200-day moving average. This is a season. Um, this time in the spring, any talk of any struggles in the crop can ignite pretty big rallies. But technically speaking, we're holding above that 200-day moving average. Um, we're wicking, or we're the dip is being bought. We can see by those wicks. It did it again today. It's picking up momentum, and I like this trade to the upside.
Little basing day today. I'm going to change this to regular trading hours. I really like looking at the regular trading hours of this market. A little basing here today, but that's good. Right? That could be looked at as a flagging pattern. All right, we're making higher lows. Like I like this chart, Coach Paul.
Yeah. Um, very friendly, and I don't talk fundamentals too often, but seasonally, these markets can ignite bigger rallies. So, still friendly to the soybean market. And if you're going to trade it, beware. It is the NASDAQ of grains.
What do you mean by that, Coach?
It's violent. You can make a lot of money, and if you're not um, paying attention to your risk management, it can um, it can cost you. But if you're good risk management and you have a good trading plan, um, this could give you a big opportunity.
Stuff, soybeans.
What was another mark? Oh, let's look at silver. We haven't looked at silver in a long time, and it was down pretty big today. Let's look at
Number
starting on the
two,
daily.
number two percentage mover on the day, silver, down about 2%. Maybe following gold a little bit here. Oh, look at that sell off. Look at a daily. Let's take a look at a daily. What's that white line?
See the 200-day moving average. Boy, I
Is
look
this
at that break versus gold. See, this is what you could see that, and I'm not saying it's going to happen, but the way it's moving, if gold gets liquidation, you could see something similar. Like, what heck? How could that do that? Well, if you've been around commodities long enough, that can happen, and it does happen. I don't trade silver. It's never been friendly to me, except for cash silver. Um, it's a different story, and even then, without leverage, you're giving up 20% of any gain or adding 20% to any losses. Why? If you ever traded cash silver coins or ingots, they charge you 10%.
just to execute a trade?
If you go and buy it to a dealer, it's 10%.
Hmm.
I say it's 20% because you got to get out, and it's still 10%.
In the wrong business.
I went to go look to do that. I mean, it sounds, but you have, you have to do some size because you might sit on inventory. So you got to become big. But yeah, you know, it's expensive. It's like 20%. They 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 have some risk, but know that if you're ever dealing in cash, um, in silver, gold, gold too, 10%. Well, right now in gold, it's over about $350.
Yeah.
for an ounce of just commission. Now you got to get out. Yeah,
Yeah, I mean,
go ahead if you don't.
I'm a gold guy,
Yeah.
right? Just
So
everybody, right? Dakota was saying the other day he has a gold guy, so there is a way to become a gold guy. Doesn't sound like a bad business.
yeah, but storage. Well, it's going. But if you look at storage, um, because you have to store the gold. You can't you put it under your mattress. You really have to go
Right.
get a safe.
Dig a
Um,
hole in your backyard.
dig a hole in but there are costs to holding it. So if you're a dealer and you got you can hedge with options, or if you're big enough with futures. Um, but that's why they get it such a big premium. So they're stuck. And let's say gold starts breaking, people don't want. What are they going to do? They're going to liquidate gold. So it goes to who? The dealer, and the dealer's got to get some edge. I'm not here to be your friend. you know, oh, I'm sorry. Did you get caught in some gold and you want to get out? I'm going to give you. No, it doesn't work that way. So anyway, we went off on a tangent here because I have dealt with cash commodities, and it's not as easy as you think. I mean, there's a price
Hmm.
to pay, but silver. Look at, I mean,
That's a crazy daily range right here we got going on. This is a daily chart.
this is a daily chart holding that 200. Um, boy,
There is micro silver. SIL is the contract if you
yeah.
want to trade it. This silver contract is pretty expensive for top step accounts, $25 a tick, but the micro is $5 a tick if you're going to trade it. Look at platinum.
So,
All these other metals are just very tightly range bound.
and we haven't looked at Dr. Copper. Range bound and
Very
kind
tight.
of looks like silver.
Yes, it does. Certainly does.
So gold is the one that's sitting on the precipice.
There's a move coming. All right, we got some more questions here. Chauncey had asked in the Nasdaq. We talked about that order at 21,399, and the orders conveniently where we're trading right now, or we closed at that price. Keep that line on your charts. Why didn't the market shoot down on that big market sell? Because it wasn't actually a market sell, Chauncey. If you watched how that got filled, and if you watched just Power Hour, the last 5 minutes of it is when it got filled. That was a passive order. I actually think that was the perfect example of showing how passive orders don't move markets. Uh, Aggressive orders do, right? So that person, and I've used the apples analogy before, right? If I'm sitting on the side of a highway with a bunch of apples to sell and no one buys them, I'm just a guy sitting there with apples, right? I don't have a market for apples. But the minute someone comes and buys them, now we have a market. So that passive order was just sitting there waiting for someone to fill it. So they want the fill at that specific price. Either give me this price or I don't want it, right? So in order for the market to move, somebody has to come and buy that order and then continue to buy above. When we see the market move on a sell like that, it normally happens when that passive seller, they might get impatient, right? I'm sitting at a price and I'm saying, hey, you know what? I only want to sell right here. And the market's like, well, we don't want to buy any of it, right? We don't want to buy one of those contracts. So then that market participant, if they have to get a fill, right? What do you have to do, coach?
Or you have to move the price.
I gotta trade a little bit lower, right? So if I'm sitting on my price and I'm saying no 21,399 or nothing, I don't want it, and the market doesn't trade with me, but I have to get those orders filled, then I have to go to the market, which means I have to bring my price down, which is then why we see some of these liquidation moves. Um, it's
You
it's kind
know,
of what go ahead, coach.
and another point on that is that it was flat priced.
Yep.
Um, at one tick below the the big number. What was that? 21
21,400.
500, 21,400. I'm sorry. Now, a big order like that would usually be filled on a VWAP basis. Sell 100 every 10 minutes. Um, and get an average. But this wasn't. So that tells me that it is part of a large institutional hedge, um, or an option related deal, or a deal that was made in the cash market or over the counter market and hedged in the liquidity of the futures market.
We do have options expiration this week too, so it very well could be that.
Yeah. So one of the things, if we we don't talk about too often, is understand that the different participants in trading. It's easy to get caught in our mind because we're speculators.
Yep.
Speculators are just a percentage of the market. The commercials move the market because they have to be involved. We do not have to be involved as speculators. So um, that is it's most likely not a speculative trade. That was done most likely to me as a hedge against some kind of deal in the
Yep.
in the cash market.
Futures are used to hedge options positions, right, Coach Paul? So uh,
Yep.
that was very, very interesting there. And yeah, it doesn't. And Lenny Bradford says, could that have been a sell to open order? I'm going to go ahead and say that it probably was a sell to open, but again, that doesn't mean that this person necessarily wants the market to go down, right? If I'm hedging, I'm okay with the market going down, right? Because I'm hedged. So my losses, if I'm net long, but I've hedged the position, I'm okay with the market going down because it's going to minimize my losses. Um, so that person doesn't necessarily need or maybe want the market to go down, but because of that hedge, they're okay if it does. We will see, and I think that's why it's more important to see how the market responds to these prices instead of saying, "Oh, they were getting short, so let me get short with them." Uh, 'Cause we'll see the reaction in price.
Yeah. And especially the fact it was such a specific price.
Why one tick below 400?
Yeah. So, um, like I said, an order like that would usually get filled in a VWAP type manner.
Right.
If it was completely speculative or liquidation of longs or a short, but interesting, especially on a day like today where it was kind of dead, and they let it be known. They didn't hide it, right? Just put it out there. I'm here. Take me out.
Claude says, "Can you talk about the 1221 trade on Nasdaq?" It ran the low, another J trade there, high volume at the lows, very similar to the one that was at earlier in the day. Right, same exact thing. You wait for it to close above and right back into that range. Really nice trade. We got a request for ZB. I know there was some interesting stuff going on in the treasuries today, Coach Paul. Jack kept talking about the yields increasing. We see
Yeah.
price decreasing. What is going on here?
Um, it's the size of the U.S. debt. It's got to be sold, and to do that, you have to attract higher prices. Futures are inverse, so the lower the futures price, the higher the interest rate. Um, Now we're sitting here in that range, from the Chinese um, selling,
Yep.
and we've sat in here on, on it. This is a sloppy trade. So if we look at at a half hour,
Do you look at overnight with the treasuries?
I will. I don't like to take positions, opening positions on an overnight trade because look at the volume.
Right.
It, but 7:30 or 7 o'clock. Look at that Central. When the volume starts coming in,
Oh yeah. Yep.
um, and bonds are struggling. Um, you know, okay. There's still reverberations from the tariffs. Um, oh, you've lost your a bit of your credibility. Um, I'm speaking the rest as a debtor nation, which we are. It was a it was a no-brainer for other countries to put big money into U.S. treasuries. It was the safest place in the world. Mm,
Yep.
after this tariff kerfuffle, it could be like, hey, no, we're going to spread it out, or we want higher rates.
Hmm.
To get more into that, Ray Dalio has done a huge series. Um, it's very concerning because what's happening is the U.S. Treasury or the U.S. debt could cut off credit in the private market, and we see that really in mortgage rates right now. I mean, mortgage rates are still pretty high,
Yes, they are.
and you have a president demanding lower rates and also lower interest, lower inflation. All right, that doesn't work that way. So I just get a feel it's very heavy,
Hmm.
and if what could happen, this could turn into a disaster because it's the Treasury okays the Fed to float the bonds so they can pay their bills. Now, what's interesting is after that tariff, there was an announcement there was going to be all sorts of money coming into the Treasury from the tax. By the way, a tariff is a tax. It's not a debate if you're confused. It was named after the first entity, an Arab guy named Tarif, um, who
He gets royalties.
taxed, yeah, who taxed imports into the country. This is really what a tariff. It's a tax. Now that isn't happening at least for 3 months. So there isn't this big bonus coming into the treasury, and it still has to float this massive debt. Um, and you pissed off your bank. You pissed off your creditors. What
Right.
are the creditors going to do? Offer you a cheap deal? No, they're going to say, well, this round, we want more interest. That seems to be what's happening because there's no bounce. Um, so I don't know the date of the next big auction, but there seems to be an auction every day. But the
Yeah, every
30
day.
year one,
Which
the
one would you
30
be
year
looking
one
for? The
is
30-year?
important. Yeah, because
And it's funny, Jack and Andre all day really today, and I'm learning right about how much the treasury markets affect kind of everything. Um, but Jack, Hogue, and Andre all day kept saying, "When are equities going to realize what the treasuries are doing? When are equities going to catch on?" Um, and if you look at that 30-year chart, yeah, that looks doesn't look good. Say that from my
now, one thing with equities is it's designed to be owned.
right.
So we had pent up demand for equities. Um, But no, doesn't have to happen. Believe me, I tried that. I kept on selling equities in the late 90s and they kept on going up because I was in the bonds going, this can't continue until it didn't. But yeah, very concerning. And maybe gold is feeling a little bit of this because forego, when you buy gold, you forego interest payments.
Okay.
Now, let's look at a weekly in the bonds to get a really a longer term view. And really, it's been sideways here. Um, but once again, look at that candle with that selling. Yeah. Now we're at the bottom of it. Um, hmm, I mean, that candle, that was what day did they call it? Independence Day?
Liberation Day.
That too. All right.
So that yeah, was this one Liberation? So this was the okay. So this was Liberation Day was April 2nd, right? So we still kind of rallied from there. This was the China response candle,
Uh-huh.
right? Because it came a
And
little bit later,
yeah. And Japan,
right?
biggest holder of it, let's say they wanted to liquidate half of their $1 trillion balance.
Hmm.
What what's going to happen?
But who's the buyer?
Who's the buyer? So, yeah, the game is on. Now look at that versus the 5 year. Or it's not as dramatic. It's not near those lows because the the Fed can manipulate the lower end of the curve, the
Hmm.
shorter term
Is the Fed just more
by
prone to buying? These,
yeah, there's the debate going on whether they're doing some QE on the short end. I don't know. Jay Powell has not called me lately. He's ghosting all my texts. But I've seen some talk about it. I don't know, but yeah, there's right to be concerned. Um, because there's 90 days before the tariffs come.
right?
It could be you know, this isn't this game didn't just disappear.
Yeah, that's the thing, right? It's yeah, it didn't just go away.
It didn't. So boy, we could do a whole show on it, but
I think you and Jack should. So I think we're gonna try to figure out how you guys have that conversation, because it's interesting. Again, I'm sitting back. I'm not. I don't. I can see technically what's going on here, but there's obviously a bigger fundamental picture that I am learning. So I think it'd be cool to have you guys have that conversation. Um,
yeah.
Flip it up for content. Uh, but anything else you got before we go, Coach? We're at time here.
No, that's it. Um, I tell you what, it's not easy selling those bonds either.
Yeah,
Um, but yeah, very interesting. We live in interesting times.
chat. I appreciate you guys on the haircut compliments. I'll show these comments to my barber, and
There-
maybe he'll give me a discount. Monica asked one more quick question, Coach Paul. Do you ever trade soybeans off the morning open?
I have. I would use a 5 minute or maybe even a 1 minute, depending on how much risk you like. But overall, I'm holding a position in it, and then I will add if I see something on an opening range that I can leverage. But yeah, you can use the opens up at 8:30 Central. Let it trade out. and then go from there.
And then Alex, I'll answer your question. It's the last one we have. The end, could you talk about how you would build a 50K XFA, like contract sizes, when to take your first payout? If I was starting a brand new 50K XFA, I would not trade more than 3 micros. Um, I was on with Ali today, and he was trading 1 micro. He said the way he looks at his XFAs is he trades 1 micro until he gets to $1,000, then he adds another one. And with
Smart.
$1,000, he'll trade with 2 micros. After 2,000, he'll trade with 3 micros. So I would trade it very slowly. If you want the account to sustain, you could do the shoot for the stars method and just go straight with 2 minis right away. Let's see if I hit a home run on the first pitch. But if you don't, that account is small enough to be a career ender if you get the wrong trade. So trade it small, be patient with it, and build in a buffer so then you can facilitate taking bigger trades with micros. You can do a lot with micros.
Oh, yes, you
Getting
can.
getting to that 5 micro where you're comfortably trading about 5 micros, that's a lot. That's a lot for that size account. So don't rush. Don't rush. But thank you everyone. Ali is a great teacher. It's fun trading with him today. Shout out to Coach Vince in the chat. Haircuts cost 2 to 3 NQ points these days. What's one? Yeah, no, you're right. Yeah, yeah.
Do they really?
My haircut was $50.
What?
Hey,
It's a nice haircut. I'm not putting it down, but
I would pay for that shit.
you know how much mine cost?
$3.99.
Oh yeah, I'm not in a hurry to get my hair back.
Right.
Those prices.
I mean, it costs 40, and then I give him a tip. But yeah, it's about 50. And luckily I don't have a beard or anything like that because I'd be paying a lot more. Um, so maybe I'll become an affiliate so I can get a affiliate marketer of my barber so I can get some discounts.
You know, one time I asked my barber, I said, when I was losing my hair, I said, "Do I get a discount?" He goes, "No, no, I'm going to charge you a finder's fee."
Oh man,
Yeah, you know, a bigger smartass than myself.
right.
He nailed me. He nailed me hard. But
Proof on it. All right. Have a good
all
one,
right,
everyone. Remember, Coach Hoop is doing classes in Discord in about 5 minutes, and we got Coach Ray and Coach Vince, 6 p.m., 7 p.m. Central Time in Discord. I'll be on Slow Markets with Dakota tonight at 7:30. Got Aaron doing the London Open at 1:30. D doing the Euro Trade at 3:30 tomorrow. Nope, today was Wednesday. So yeah, ton of content for you. Make sure you get some time off the charts as well. Work very hard at what we do here, and it's important to appreciate life off the charts to make it that more enjoyable. So tell somebody you love that you love them, and we'll talk to you all tomorrow. Thanks, Coach.
take care.